Good evening, everyone. This is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis on the markets and systems since 2003. Okay, so let's get started here. This is my detailed market newsletter for Monday, September 20th, 2021. As you know, midday I did a quick video update on the market as the markets were plummeting. Most of you have already watched that. So this is my video on, summarizing what everything happened today. I'm going to give you my views about what I think is going on, what I think is going to take place. Okay? So this is the table of contents. Again, we'll look at the general market, major indexes, indicators. We'll examine various sector charts, look at various commodities, bonds, US dollar, Bitcoin, and Ethereum, precious metals. Trade ideas are going to do some review of trade ideas from last week. I added, a couple on the weekend that still look okay. Airlines look pretty decent here, guys. Okay. So again, I don't have much comments here because most of my comments are going to be in my audio and video. Okay. So as you know, the market let loose in a big way today. Futures were down like 80 points on the ES this morning, and big sell-off today. The S&P at one point was down 125 points. The Dow was down about 900 points. So really let loose to the downside. Steve and I have been warning about seasonality. We've also been on the bearish side. We've been stating that we thought the S&P would lose the 50-day moving average, and that's what happened today, basically on a big gap down. Okay. I'm going to go over what my preferred count is here and what I think's going on. So let's go ahead and take a look at that. So this first chart here, and I normally don't do this, but I'm doing this, guys, just to save you some initial time, just as a summary. So this is a daily view of the S&P. As you know, a lot of people have been talking about these shallow pullbacks that have been occurring all year long. Down to the 50-day, up, down to the 50-day, up, down to the 50-day, up, whatever. Sometimes you undercut it by a day or so. But in our comments here, you can see it. We've been talking about it. If you go listen to my newsletters for the last few weeks, I've been stating that I did not think we would see the lucky number 7. I thought it would be different this time. And that's exactly played out. Okay. Also matching up with seasonality. Okay. So what's my best guess here? My best guess, Steve talked about this a little bit on the weekend, that he viewed this initial move down as bearish, still unfolding in another wave down. So we're looking at this right now, perhaps as a wave, minor wave A, B of A. Okay. You can see it on the daily chart here. Again, if you're looking at the video, it's much easier to see what I'm talking about. There is a support level down here in the 200-day moving average. Could we just go straight down to here? Anything's possible. I don't think so. I think there's a good chance, well, if we were to go down a little bit more, maybe we tag this. But it's also possible we put in a little low today and bounce back up. This 50-day moving average, that's been so important all year, is now going to be a resistance area. So, notice how it's curling here. So if it gets back to here, that could be a good short. Wave B, and then down again in wave C. Maybe by that time, this 200-day moving average will catch up to things. That's kind of what I'm thinking right now. Some of the reversion to mean systems went long. Some of them first entry today, some of them second entry. Maybe my thought is they'll probably get on this out on this bounce. Be a good thing. Then we go down again. Now, is it possible that whatever the Fed says, if they were to just do a miracle and pump everything to death, that you could have a low in here? Yeah, anything's possible. But for now, this would be my preferred view. A down, then we get a lower high rally, B up. You can see the fibs here, 50% fib right here around the 50-day moving average as well, then a C down. So that's kind of what I'm thinking here going forward. That's also what I wanted to put it as the first chart here. Next. Image number 3 here. So this shows you basically what happened today. We had a gap and go, right? And we sold off. These bounce here stalled at that's the VWAP. 15-point bounce, and we had another bounce here later in the afternoon, 16 points. So we call that symmetry. So basically the same thing. You look for a break in symmetry when you're monitoring trends, so intraday. And then on the trading community, I was posting that it looked like a falling wedge was forming. You could see that wedge here with the MACD divergence. And lo and behold, that ended up being a really nice, day trade. I went long. I know quite a few members went long. You had about a 60-point move on the S&P out of this wedge. That was a pretty damn good move. So that's what happened intraday. All right, guys, let's go ahead and cover some admin things. So I sent out an email today regarding some of these reversion to mean type systems. And for the SPY reversion to mean systems, we had a second entry on the trend today and the QE BTS. So second entry on both of those subsystems. Again, these systems are never fun whenever they start going long a little bit early in downtrends, but that's how reversion to mean works. You have to decide if, psychologically that's something you can do or not. But, overall the stats are decent. Again, if we get that wave B bounce rally that I'm talking about, my thought is that that'll be enough to allow these systems to exit. Okay. Next. Chart number 5 here. This shows you, let me resize this. Shoot. All right, guys, I got all these tabs open. So the other thing I also pointed out was that these McClellan oscillator systems we're going to go long. So specifically I have these modified versions. And when I talk about these is whenever the McClellan oscillator closes below the lower Bollinger Band. So one of them went long today, the triple Qs. You can see it recently did a trade about a week ago that was a winning trade. And it took a trade here today as that McClellan closed below the lower Bollinger Bands. Now, if you look at this, the Dow closed below the lower Bollinger Bands here. It doesn't show a long, but this is my modified version. The standard McClellan oscillator systems did go long. And one thing I want to point out, guys, I don't currently email these McClellan oscillator systems out as live trades that I track. Not at this time. I do post them on the trading community blog. But at the moment, I'm not sending these out. I just post them for your information. That may change in the future. Okay. All right, let's move on. Let's go ahead and move back to the general market analysis. So here's the index sector, what transpired today. Again, bloody red, even though we had, say, a 55, 60-point bounce off the lows for the S&P, which ended down about 75 points. It was down, at 125 points. So you can see that S&P down 1.7%, NASDAQ down about 2.2%, Russell down 2.4%. Obviously, all the sectors were down as you'd expect. Currencies, US dollar, slightly up today. Crypto got smashed. Not surprised to see that. We'll look at a few of those charts below. Commodities all smashed as you'd expect. Precious metals, gold was up today a little bit. Silver down, basically mirror opposites. Gold up 0.7%, silver down 0.7%. GDX, the miners down about 0.4%. Bonds, high yield corporate down with the market as you would expect. Finally let loose, and TLT up, looks kind of bullish. Next, item number 7 shows the economic news calendar. Again, all eyes on the FOMC on Wednesday. Let's go and move to some other charts. So chart number 8 here. Again, guys, this is just showing you the obvious, but this is a cool image because I have all these consolidated. Seasonality, we all know about weaker seasonality from September to October timeframe. And this is seasonality from various sources. We've been showing these for the last couple months, and they all show that particularly weak seasonality from September into early to mid-October. All right, so they're all showing the same thing. Some of these more recent ones showed seasonality right from the mid-September. So those clearly played out. Next. Chart number 9, here's the daily view of the major indexes. Again, you can see that let loose today, obviously off the lows. You can see the tails on a lot of these indexes here. Next. Chart number 10, here's that quarterly chart. Steve showed this on the weekend. Again, this, remember, so each candlestick represents 3 months, and these don't close until the end of September, but you know, that's not too far away, guys. Only 10 days, less than that for trading days. So notice these doji type candlesticks you have here. If we end like this at the end of the month or the end of the quarter, that'll be quite telling. I mean, look at this run we've had, guys, on these. This kind of stuff here, it's unsustainable. Okay. So eventually we're going to need to do for a long consolidation period. So basically, you know, say Steve and I were talking about this earlier, the unsophisticated investors that simply just bought, say a year and a half ago, it's been easy time, right? Just the market's riding up relentlessly. Now we're going to move into more of a, you know, what I call a trader's market. Think about if we have a sideways, up and down, sideways chop for a year. That's going to be a trader's market. It's going to be a stock picker's market instead of just buying something and riding a trend. Something to think about, guys. Next. Chart 11, here's the weekly view. Again, it's only Monday, but you can see we did break that series of higher lows. We went below that low. Next. Here's the daily view of the S&P. Again, I already discussed this in my opening comments. My preferred view here, A, B, C of A, which we possibly completed today. If not, maybe we go down to this area. Then we get a B up, you know, retrace to around to this 50% area. That would be a great short opportunity. Then down again in a C, maybe get near the 200-day moving average. That's my thoughts. Next. Chart number 13, here's another daily view. It shows the pullback symmetry. So the pullback off the highs at the lows, about 240 points, exceeding all these. It's even a little bit bigger than this one, but honestly, to me, it's the same. If you round this up to 230 versus 240, it's about the same. Again, this is a big support zone. And down here. Next. Chart number 14, here's that zoomed out wedge we've been showing. So 240 points, roughly 230 points. Ultimately, this wedge does measure down around to this area. You can see right around that 200-day moving average. Very long wedge we've been developing. My hope overall is that this is all we get, guys, and we don't get something, you know, worse. This would, to me, this would still be a relatively benign, can't think of the words at the moment, orderly pullback. That's what I'm looking for, orderly pullback. So I'm hoping that's all we get versus something more drastic. Next. Chart number 15, here's that 60-minute chart showing these tick extreme pivots. As you'd expect, and I expected this, you know, we finally let loose, and you could see all these pivots that I left in here. The 60-minute chart doesn't go back far enough anymore. Basically, today's lows, we got right around that 4307 pivot. Okay. Next. Chart number 16, here's the 60-minute chart. Steve was showing this on the weekend. So again, we counted a clear 5 waves to the upside back here in August, September, right? So that's why, along with seasonality, we became very cautious, bearish. Then we started selling off. And what it looks like here, Steve talked about this on the weekend, you have this wave 1, 2, 3, 4, 5. You can clearly count 5 waves down right here. Okay, wave A. Then you can clearly count an A, B, C up, wave B. And Steve said that he favored then a new leg down, and we clearly got that today. Now, did it end, or is it, you know, could this be a 4 and then you get a 5 down? We'll see. But, you know, this would be one count, A, large A, B, C of A. Okay. Here added fibs. You could see 38% fib, 43.97, 4400, and 50% fib, 44.25-ish. The 50-day moving average on a daily chart comes in around here. You can see how the moving average was a great guide here. It flipped bearishly stacked there. And then you got this first little pinch area. That was a low risk short. And then this was also a low risk short late last week. And the moving average pinched again on the underside. Next. Chart number 17 is a 15-minute view. You know, late in the day we had some divergence. When we finally popped, we popped pretty hard off the lows. Here added fibs from the highs to the lows. Again, you can see where those fibs are. Up in here would be a pretty good area to look for a potential short, like I said. Finally, chart number 18 is the 5-minute view, which I already discussed today's action. We had ended with that nice wedge, which was a pretty good long opportunity late in the day if you were following the trading community. Next. Chart number 19, here's the KISS charts. Clearly we lost that DVT there. You can see got close to that weekly ATR today. Next. Chart number 20, here's the 2-day KISS, and we also lost that DVT there as well. Tested that weekly ATR. Next. Chart number 21, here's the cycles. Now this is what interests me more. So I've been talking about these A's. These are pretty good guides in this daily. Amateur buying, they tend to occur early, and that led to selling. Okay. You can see the moving average ribbons, how they flipped to bearish configurations last week. And you can see the back test under here last week. That was a low risk short. So this falls bearish. And then it's that first pinch. That's a low risk short opportunity. But what I'm looking at short term, guys, take a look at the 120 minute and 60 minute. Look how wide the ribbons are. We talk about when the ribbons get too wide. You can see we had some DeMark, 13 on the 60. So that led to a bounce. And these are still pretty wide even after the bounce. That's why it's possible that we do have a little trade low in today, perhaps. Next. Chart number 22, here's the Dow. I've been talking about this, that break of the trend line. And I've talked about how this area was of little support, like an air pocket. You can see we flew right down into that, didn't we? So this is the support area. And it's interesting on the Dow. I mean, it's damn close to that 200-day. It's, unlike the other indexes, it's been going sideways for quite a long time. So it's not very far away, is it? I think ultimately on the correction, if the S&P does work its way to the 200-day, the Dow is going to go below that, right? So, you can see there's an air pocket to here. These are all, think about these as all little air pockets. These are your support levels. Those are your air pockets. Next. Chart number 23 is the weekly. Clearly that rising wedge Steve and I have been showing for the last, month is playing out. Next. Moving to the triple Qs, there's your weekly view. You can still have that uptrend line on a weekly. The Qs have been just, ridiculously strong, as you know. Next. Chart number 25, here's the daily. So I talked about this 370 as support. Well, we gapped right below that today. That's now resistance, okay? So 360 area, that's your support. We got pretty close to there. These are all your supports below that, which will likely be tested over time if this is simply an ABC of A down. Okay. Next. Chart number 26, here's the 60-minute view. Talked about this rounded umbrella top that we showed, early last week, which obviously played out. You broke through that. Every test here of this broken trend line, this broken support trend line became resistance. Just beautiful technical analysis. We got very oversold today. Big hard bounce in the last hour. Moving averages are still wide open even after that bounce. Next. Moving to the KISS chart. So the KISS on the daily wasn't, I don't think this is updated, so give me just a second. All right, guys, sorry about that. I had to update this, so let me go back to it. There we go. All right, so here's the updated view. Clearly, we lost the DVT, as you'd expect in the daily. You can see what the ribbons are doing here. Next. Here's the 2-day. We lost that DVT there as well. Here's the cycle time frames, similar, like I said, to the daily, the S&P. Looks like this hasn't updated either, guys. Sorry about that. Okay, so here's the updated view. Okay, on the intraday chart. So just like the S&P, you can see, especially on these faster time frames, 2 hour, 60 minute. You can see the DeMark 13 on the 60 minute. Look how wide these ribbon are. So that's, you know, not surprised to have a bounce here late in the day. Maybe that'll carry through. Next. Chart 30, here's the Russell. Nice down day to day as you'd expect. Overall, still in this big weekly pattern. It's been going sideways all year long. Next. Chart 31, here's the daily. And finally, chart 32, here's the 60-minute view. On the weekend, I talked about this open gap. We filled that right away this morning. Went a little bit below it. Got oversold, bounce there. Oh, and one final index here. Haven't really shown this in a long time. The ADR International. Look how ugly this thing looks, guys. International, you had this sort of rounded top. Lost a big support here, which, you know, below this, you essentially had an air pocket down to there. So likely at least going to here. And then really below that, though, you had another air pocket to here. This thing just looks super ugly. All right, let's move on and look at some indicators. Chart 34, here's the VIX, as you'd expect, closed outside the upper bands. We talked about how the upper bands were flat. That allowed for, you know, a likely move to the upside, and we got that today. Next. Chart 35 is the 60-minute view. Late last week, Steve pointed out this falling wedge in the VIX. Clearly that played out. Now again, look how wide those moving average ribbon got there. So it was due for some retracement, which we got late in the day. Next. Chart 36, here's the VVIX. Just wanted to point out, look how great of a early warning this gave. This, remember, whenever this goes above 110, that's when you get your early warning signal, sell signal for the market. Right there. So about 2 weeks ago, just barely off the highs. That's where it gave you the warning to get out of Dodge. That was a great signal. Okay. Next. Chart 37, here's the NYMO McClellan oscillator system, closed below the lower Bollinger Bands today. As I stated, most of the McClellan oscillators did close below the lower Bollinger Bands. That sets up a possible reversion to mean bounce trade. Again, sometimes you get these times when you need 2 or 3 bars below, like here. But sometimes you just get one. So we got that today. So we're quite stretched in the short term. Next. Chart 38, here's the S&P McClellan. Same deal, closed below its lower Bollinger Band. And remember, our custom McClellan Bollinger Band systems, the triple Qs, gave us signal. All right, let's go ahead and move to market sectors. So we're going to update a variety of sectors, but one sector that stands out that Steve told me about is airlines. They've been in a correction, you know, most of the year. So I kind of like some of these things that have already come off the highs, had a decent correction versus stuff that's just coming off the top now. Here you got a nice coil forming. Looks kind of decent. Let's take a look at some others. Chart 40, here's the JETS ETF. Nice name. This is a simple way to play it, just an ETF. Very nice coil. We like these coils. Could have a tight stop right here at this, say today's lows. Looks good. Next. Chart 41, JetBlue. Here's an individual airline. Nice looking pattern. It's a long idea right over this trend line with an initial stop here. And finally, chart 42, American Airlines. Nice little volume patterns. Now, technically, I like the patterns above better, but this doesn't look bad either. So, nice little sector to watch. Let's move on and look at the other sectors. Here's financials. So they finally lost this ledge support here today with a big gap. So remember, got kind of a air pocket here. So next major support is here, 200-day, and then of course way down here. But let's not even talk about that. We'll just look at this area first. Next, chart 44. Here's IYT on the daily. This has been trending down most of the year as well. So it's been weak. Next, chapter 45, technology, gapped below this. So again, here's another example, guys. Kind of like on the market. If we get an oversold bounce back to this to retest this channel line, that would be a good short opportunity. And maybe we get another move down. This is your big support down here. Okay, let's move on. Chapter 46, biotech. Looked pretty decent last week, but gave back today. Couldn't help with the market. Still hanging on to the 50-day on a closing basis here, though. Next. Chapter 47, industrials. It's been on this kind of topping pattern. It's been going sideways since May. Now it's at the bottom of the range. It's actually pretty close to its 200-day moving average. Now below that, you don't have a lot of support till you get to here, but this is an area to monitor. Next. Chapter 48, consumer staples. Broke from the coil last week, continues lower. Really no big support till you get down into this range. But again, it's oversold, so you know, like anything, if the market has an oversold bounce, maybe you get a this and a that. Okay. Next. Chapter 49, utilities, also lower today, but a doji, closed off the lows. Next. Chapter 50, healthcare, had to double top, lower today as well with the market. Chapter 50, real estate, lost this support here, 50-day moving average today. Next. Chapter 52, energy, stalled this trend line last week. Still has a potential inverse head and shoulder look, but it needs to form a higher low here. Kind of an ugly day so far, though. Next. Chapter 53, there's the oil services. Now, this was quite weaker. Steve drew a potential little wedge there on the weekend. Next. Chapter 54, materials, continued lower, right at the 200-day moving average now. All right, let's look at some commodities. Chapter 54, crude oil, big pullback today. This broken trend line here is now your support line to monitor. Next. Chapter 56, natural gas, again, it's had a hell of a run, got quite extended, pulling back. A little below the 90 MA, maybe the 20-day moving average could be a target over time. Next. Chapter 57, here's the 60-minute view of the ETF, UNG. That parabola break last week was a good sell signal. Next. Chapter 58, copper. Just the weekly chart, but just showing down 3% today. This is the overall larger pattern. Next. Chapter 59, here's the daily. Stalled right at that trend line a couple weeks ago. Boy, it's been shot down. Can it hold that low, or is it going to go down to here? Ultimately, we'll see. Next. Chapter 60, uranium also down today, as we'd expect. Next. Chapter 61, here's the daily. So I talked last week that I thought this would finally have a deeper correction again. So I said right around this 20-day moving average, I'm going to monitor it. Could be a low risk trade for at least a bounce, but I think it'll get a lower high, maybe down again after that. So I only view it maybe as a bounce here if it can hold this. Okay. Next. Looking at bonds, TLT, we redrew this coil on the weekend. Kind of looks bullish here again. We'll see if it can bust out through here. Obviously, the FOMC will be a catalyst either way. Next. Chapter 63, 10-year treasury yield. Kind of an inverse look of TLT. Monitor these trend lines. Next. Chapter 64, J&K, high yield corporate. Obviously, finally let loose today. This could be a potential support area down here now, 50-day. Next. Chapter 65, Bitcoin let loose. So, not surprised. Bitcoin at a divergent high up here, MACD. Bounced. I remember if you go back and listen to my newsletters about a week and a half ago, I talked about when it was down here that I thought it would form a lower high, and that's what it did. It formed a lower high, perhaps a wave B, and down. So it's been playing out like I thought. Next. Chapter 66, Ethereum. Boom. Sliced right through this little weak support. Again, same deal. Formed a lower high after that initial sell-off. Big down day today. Next. Chapter 67, US dollar. Slight update today. Still overall a bullish looking pattern, isn't it? Potential ascending triangle. Next. Charter 68, US dollar ETF, UUP, same look. This could be a longer term target perhaps up here if it were to break out. Next. Charter 69, gold, up today slightly. Again, sloppy mess, quite honestly. Support, resistance. The stocks are underperforming. Next. Charter 70, silver down, back to this longer term support. Next. Charter 71, silver on the weekly. Broke that coil, back tested his resistance, down again to this lower range that it's been in. Is it going to hold here? Is it going to bust loose? We'll see. Next. Charter 72, GDX down, made another low, but a little off the lows today. Again, ugly, quite honestly. Next. Charter 73, GDX on the 60-minute. Got a little oversold today, a little MACD divergence showing up here. You could see that on the MACD there. So we'll see. Maybe we get a bounce here, especially if the market bounces. All right. Let's move on to stocks. Here's Apple or Crapple. I already talked about this today. Lost the support trend line last week. Longer term, this is your next support and the 200-day moving average. Again, maybe this gets a bounce here. This would be resistance up here, possible short. I think overall it works lower. Next. Charter 75, Microsoft had that perfect double top. Next. Following up on some trade ideas from last week. Obviously, a lot of longs would have been stopped out where you should have been. A lot of these shorts have obviously followed through, like Qualcomm. It's been a great trade. Take some damn profits, guys, please. Next. Charter 77 NCMI, one of the long ideas that gave a great trade last Friday that actually held up today. But, you know, I took the majority of my profits last Friday on that 50-day moving average test there. I just viewed it as a trade. I do like the volume pattern still, though. Next. Charter 78, APPS, again, looked good on Friday. Gave back today along with the market, as you'd expect, with a lot of longs. Next. Charter 79, PAG. Gave a great move out of here, pulling back. Now, again, the fact that the volume was strong here, this is now your support. In fact, you could have got a low-risk buy here at the 9 EMA today. This chart looks really good, actually. Next. Charter 80, Costco. We've had this as a short for a while. Back here, in fact. Lost this trend line support today. 50-day moving average, your next support. Next. Charter 81, Tilray. Obviously, this short has worked. Again, most of the shorts that triggered have obviously are doing well. Charter 82, Beam, same deal. Was a short idea over a week ago, and this trend line break continues lower. Take some profits. Next. Charter 83, Shop. Was a short that broke last week. Back tested the trend line of the coil. Boom, down again. So you got a place for a stop. Maybe today's highs at this point. Next. Charter 84, ACTG. Still one I'm going to monitor, see if it holds up here. I'd prefer maybe to buy a pullback into this area. I like the volume patterns overall. Next. Oh, Charter 85, BLNK. One of the short ideas that continues lower from last week. Next. Charter 86, Cron. Same deal, one of the short ideas from last week. Take some profits. Some divergence down here. Next. Charter 87, EMR, one of the short ideas from early September. Obviously, consider taking some profits, especially with that gap down. Shooting star doji today. Next. Charter 88. Here's one I posted on the weekend along. It still looks okay. This bottoming pattern, decent volume. Say you could buy it over this trend line. Tight stop. Still looks okay. Next. Charter 89, EPZM, when I showed on the weekend. Still looks okay as a potential long. Just a little pullback today. Next. Charter 90, EVRI. This could be a potential short if it loses that trend line. Next. Charter 91, RVMD. Kind of a flag look to it. And again, guys, remember the airline sector stocks and ETFs I showed you above look decent. All right, that does it. We'll see what happens tomorrow. Have a wonderful evening. Take care.